necessarily put it through so fast.
Exactly. And just reiterating some of the points that you just made, like we have a tentative deal that is within the works, but we still have a long way before we get that through Congress. And it's really going to be contingent upon, I think, what some of the Democrats will want to see coming out of this debt ceiling negotiation on top. But I think at the end of the day, the key point here is that no one wants to see the United States go into default, which would lead to much more long-term consequences in the markets and also essentially increase some of our problems that we're having with inflation. So I believe that Republicans and Democrats will eventually come together to make certain that this deal does pull through.
Right. I mean, it's never been that we've actually experienced default. We've gotten close. We've had sell-offs. We've had downgrades. And in fact, Fitch put the U.S.'s perfect rating, AAA rating, on Credit Watch negative. Not just the kind of stuff that you want to hear. On the other side of the coin, NVIDIA, we were just talking about the big numbers. Last week, we saw it jumping over 25% on Thursday after its numbers. AI, this has been referred to as an epic rally. I mean, people cannot believe what they've been seeing. What are you watching when it comes to tech driving the market? Is this all good news, or are there worries that go along with this?
In general, I think this is really great news. AI has been a headline star shooter, and also machine learning has been like a star topic in the markets for the past quarter, but also for the past couple of years. Whether we're looking at early stage companies in like the seed venture capital rounds or even late stage companies, AI is considered kind of especially generative AI is considered some of the newer, more exciting, innovative technologies that's coming in, especially when it comes to, again, early stage startups. So everyone in almost any company that you talk to these days is incorporating AI into their processes somehow, or they're incorporating that as one of their like key moats and edges in how their companies are building and operating better than traditional competitors. And so the question around AI and what makes it so effective, and this is why we're seeing such a huge jump in the NVIDIA stock today, is that it's largely driven by microchip manufacturing and high CPU processing. And so companies that are able to create generative AI are companies that are able to essentially process that AI at a much faster rate using machine learning or using different types of codes and processes to make certain that their AI is effective, is going to continue to give them a competitive edge. And NVIDIA is one of the few companies that is creating the back end or the chips that process a lot of these AI and machine learning processes. So it's a great news in the market. And as we continue to see AI become more prevalent, we're going to need, again, faster processing, and chips that are able to actually compute all of that data. So that's where you're going to see that's where we're seeing this amazing rally with NVIDIA, also with Broadcom as well.
All right. And in the meantime, I mean, there's been comments even just moments ago from Barkin talking about inflation and that how stubborn it truly is. And there's still the bet whether or not the Fed will raise rates on June 13, 14 when they meet. What camp are you in, and what do you think the Fed should do?
I've been called very hawkish on some of these programs. I believe that the Fed's job is to try and continue to get inflation under control. We're far from our traditional targets and our median target of about 3%. And so I think that we are well on our way, and I think the Fed is probably going to be justified in trying to raise rates one last time, perhaps in June. The other reason for that is just it's hard to kind of because the market is doing so well. If we think about how unemployment is around 3.5%, I'm not certain how we're going to get it any lower. Like you're going to have to start asking people to work 3 jobs instead of 2. But in order for us to continue with such low employment on top of other positive factors in the market, inflation is going to continue to be sticky, which is why the Fed is going to have to continue to raise rates. I was early on in May more on the side of the stay, but now that we continue to see positive news, whether it's through the stock market, consumer confidence continues to go up, as well as we're seeing like bond yields starting to come down as well. I believe that that's going to give the Fed more recognition and more of a purpose to actually continue to increase rates come June.
Right, right. And look, the jobs picture, there's still a lot of talk that the jobs picture, which we'll get more on detail on jobs later in this week, but that too supports the Fed making another move to the upside, raising rates one more time. Consumer confidence came in, so while it was better than expected, it was still a 6-month low. I think that's an important, notable piece of economic information, because if people have money, but they're not going to be spending it, then you'll see a slowdown. What do you say about a portfolio strategy at this point now with all these balls in the air?
So portfolio strategy wise, I remain very confident I'm surprisingly confident in the consumer sector, but most of the time when we're looking at more of an inflationary environment, some of the key stocks that I'm looking at, or some key companies that I'm looking at, are more in the defense sector as well as consumer staples. If we're thinking about consumer confidence over the past, like you said, 6 months, we're still at a 6-month low, but that data is reflecting the high inflationary environment that we were in during that time, and it's still being passed on to the consumer. As we continue to see inflation come down, I think this is starting to reflect in how consumer confidence is beginning to come back up, that we will begin to continue to see a lot of those numbers coming back in as relatively positive. And how that affects like portfolio earnings, how that affects different stocks that I would be looking at, definitely continuing to look at consumer staples, especially because people are going to have to buy toothpaste, they're going to continue to have to purchase toilet paper and diapers. And then defense spending is also a plus when it comes to relatively like high inflation or like cautionary environment that we are in today.
Right. There's been a lot of talk. So you mentioned, for example, consumer staples. Over at Citi, they're looking at things like that are in aerospace and defense. They names like Lockheed Martin, Leidos, General Dynamics as potential beneficiaries of the debt ceiling, assuming it goes through. And even Kevin McCarthy said he sees it passing the House. I mean, he said something to that effect that, he's confident it will pass through. Do you like aerospace and defense, or are there other sectors besides consumer staples that you do like?
Oh, absolutely. Aerospace and defense is also so. And chiming in again on the points that you made, the budget cuts that we will be seeing in the market is coming into will not be affected by military spending, and so we will be expecting Lockheed Martin, General Dynamics, Leidos to actually reap the benefits of this new debt ceiling negotiations, assuming that things pan out the way that the Republicans want it to. And I think that we'll continue to see a bump in those defense stocks, aerospace stocks. It also directly ties into some of the work that they're doing when it comes to AI as well. So again, all of these factors point to a general bump in NASDAQ stocks as well as the S&P. And again, it's really going to be contingent on what happens at the final stages of the negotiation process. But I'm pretty confident that McCarthy is most likely going to get a lot of the items that he is requesting for this negotiation at this time.
Yeah. What are you expecting for Friday when it comes to jobs?
Jobs. So honestly, I think that again, we're continuing to see unemployment come down in the U.S. And so when I'm looking at job reports currently, I'm expecting that we'll probably continue to see either a steady increased jobs numbers, or again, like kind of slowly coming down in terms of unemployment rates. And how that affects larger market macro factors, again, this is going to really help to kind of affect the Fed's decision and what they're looking at for inflation. As unemployment continues to come down and as we continue to see relatively more positive job numbers, it's pointing to a more continuous sticky inflation number, which therefore leads more credence to eventually, like, we're going to have to increase rates probably in June.
Right. Victoria Bills, thank you so much. Banríon Capital Management, nice to see you. Thank you. All right, later this hour, we're talking with